Welcome to Cafe Mutual YouTube channel. Friends, one sector that has benefited very significantly post-COVID is the real estate. In fact, the sector has only seen rally after that. But what are the upcoming opportunities in this sector and what could be some potential challenges? To talk about more about this sector, today we have invited Arun Sundaresan, Head-ETF Nippon India Mutual Fund. Arun has over 2 decades of experience in the MF industry. So without wasting time, let's welcome Arun. Welcome to the show, Arun.
Thank you, Nishant. Thanks for having me on the show.
So Arun, the boom in the real estate happened after a prolonged bearish phase. So, what factor has led to revival of this sector, and why do you think that this sector will continue to do well in future?
Yes, thank you very much. So multiple factors actually. I could divide this into distinctly two phases. One prior to 2016 and what happened after that. So prior to 2016, the sector was quite unorganized. There were a lot of uncertainties. There was no standardization. Possibly there was no confidence for buyers that when you buy a project, it will get executed and you will get delivery in the committed time, etc. Also, in the previous decade, the real estate prices also had gone up significantly. So the price levels also are high, which were kind of discouraging buyers from taking that plunge. But in 2016, a host of regulatory changes, positive developments that happened. The key one being the introduction of RERA and IBC, which is the bankruptcy code. So both of these things changed a whole lot of things. RERA actually standardized a whole lot of things. In fact, a lot of things became clear. It boosted the confidence of buyers, and since then, slowly, the activity started happening. And particularly after COVID, that also was an impetus where a lot of this pent-up demand, so the lack of activity for the last decade or more than that, where people are not buying properties. So that pent-up demand also started, getting translated into purchases, and the real estate activities actually started happening quite significantly after COVID as well.
Okay. So Arun, what's the reason for launching Nippon India Nifty Reality Index Fund?
Okay, so the real estate sector is a fairly large sector. It accounts for already, 7.3% of the GDP.
Okay.
In terms of employment, it accounts for almost 18% of the formal employment, and it also indirectly benefits lot many related sectors: paint industry, other construction industry, steel, and so many others. So the impact that real estate has directly and indirectly is fairly large. So this is point number one. Second, there are multiple factors which we believe augurs very well for the real estate sector for the longer term. Now, what are these? First and foremost is uh, India being a high, fast-growing economy. The households also increasingly their disposable income, their own propensity to spend, all of this will keep improving going forward, right? So, real estate is something that, in general, and Indians in particular, aspire. So, everyone wants to own a house. Today, they may not. At some point in time, when they can afford it, they might want to own a house. Somebody owning a property, maybe let's say a 2 BHK, at some point in time might want to upgrade and go into a bigger house. So all of these things will be structural, long term in nature. So that's something we believe will play out. In fact, a lot of surveys, a lot of expectations are that from the current 7.3%, as we go along over the next decade and 2 decades, the contribution of the real estate will be 10%. And as we go along, which implies that real estate is a high growth sector. So this is fundamental. Second, there is also a lot of government support and policy emphasis on this particular sector. across the board. So it could be for lower income, middle income group, like things like Pradhan Mantri Awas Yojana, which talks about so many real estate units, housing units being built. There is a credit-linked subsidy scheme which is available for a lower middle income group. For the urban and the higher income group, things like development of smart cities, even the fact that there is a lot of emphasis on infrastructure development per se. Let's say the national infrastructure pipeline, the Gati Shakti, everything. All of these things are likely to improve the overall infrastructure, and all of that will also benefit real estate segment in particular. So therefore, we think that there are a lot of levers, a lot of growth drivers as far as real estate is concerned, and this provides for a fundamentally good long-term growth opportunity.
Okay. Arun, the Nifty Realty Index has only 10 stocks at the moment. So why do you think that the underlying index offers adequate diversification to investors?
So the representation of reality in the market, forget about this particular index, there are only 12 listed companies in Nifty 500. So
Hmm.
here, the top 10 companies. So these are the actual the reality companies which are available right now in the listed space, right? So this is a pure play reality. It does not have any other related fields like construction or cement companies and
Hmm.
paint companies and stuff. So we are here talking about the proper realty companies, right? So the representation in the index is virtually not there. So in Nifty, there are no realty companies per se. In the next 50, there are two companies collectively accounting for a little over 3%. So in whichever format you invest in normally in any diversified fund, your
Hmm.
exposure to real estate will be very less, probably 1%, 1.5%. But if you do believe that real estate offers good long-term potential for
Hmm.
various reasons, I did talk about increasing aspirational levels. We talked about policy support. Then there is this other aspect that real estate also has become affordable over a period of time. Last 10 or 12 years, if you look at real estate prices, they've really not gone anywhere. So they've stayed where they are or at the margin even come down. If you adjust it for inflation and consider other things like interest rates have come down in real terms, if you consider all that, real estate prices are actually 15, 20, 25% cheaper than
Hmm.
it was 10, 12 years back. So all of these things actually fundamentally and contextually make real estate an attractive opportunity. We think that by investing into this, so you can increase your exposure.
Hmm.
Suppose your current exposure to real estate is only 1% through all your other funds. If you
Hmm.
invest some bit into this particular fund, that 1% can go up to maybe 2 or 3%. It is still low, but at least it will give you that bit more higher exposure. I think therefore this might be looked at from that perspective.
Okay. So Arun, real estate companies are highly leveraged. So why do you think that investors should look at this sector?
So real estate sector by nature will have leverage because the projects tend to be long term.
Hmm.
The real estate companies will have to, from various sources of capital, include debt. Do those, make those investments for the project, complete them, sell it, and then that's how they make money. So leverage will be part of their portfolio anyway. But having mentioned that, the leverage levels have over a period of time have been coming down. In fact, the current debt to EBITDA levels is the lowest that we have seen in the last 10 to 15 years. In fact, on an average from the current levels, the number used to be 3 times, 4 times. But over a period of time and right now, the leverage levels, while some amount of leverage is to be expected given the nature of the business, the current debt levels are fairly low when compared to historical averages of how it used to be, let's say 10, 15 years back. So to that extent, the levels are comfortable. Uh, Investors, partners should understand that real estate is highly dependent or levered to the economic growth, to some extent even on the market sentiment, because it's quite intuitive. You think of, when do you think of buying a house? Probably when overall things are good, economic growth is good, your income levels are going up, there is confidence, there is optimism. That's when you think of making big ticket purchases like real estate. On the other hand, if there are concerns around the corner, when there is slowdown, when there are other concerns, you might postpone. So to that extent, there could be some bit of cyclicality, right? But if you leave that out for a moment and take a slightly medium long term, given the fact whatever we explained, all of that potentially implies a very high growth opportunity. To that extent, one can take a fundamental view.
Okay. Arun, how comfortable are you with the valuation of realty companies at the moment?
The valuations, if you look at, from a PE perspective, the current valuation is close to about 47. This
Mm,
is against Nifty of 21, 22.
mm,
But let's please understand that for a high growth sector like this, the valuations, you can't expect it to be like Nifty. So it will command that premium valuation in a way that is a reflection of the higher growth potential, and also the fact that the past earnings have been so low, so the base effect also is so low. A combination of that, has resulted in the valuations, the P levels being high. Again, if you were to contextually see from a relative sense, from the recent peak in June, the valuation, the P level was as high as 70. So that has come down. So almost come down by 35%. So even when compared to how it used to be 3 years back, there has been a substantial reduction in terms of valuation. I'm not necessarily saying that, therefore, it is very attractive and there will not be any correction. This is a very, very reasonable valuation. I'm not saying that. It is on the higher side relative to some of the rest of the parts of the market, but some bit of it could also be this reflection of the very long term, possibly sustained growth potential that this particular sector offers, and also that in the recent, with this market correction, quite a bit of correction has happened. In fact, in the last 1.5 months as we speak now, the real estate sector has corrected close to about 18-20%. To that extent, the entry point becomes relatively better from, on hindsight, what could have been, let's say a month, 2 months back.
So, Arun, one last question. What are the benefits of investing in a sector through index funds?
So you get a pure play exposure. As I mentioned to you here, you're
Mm,
getting pure real estate exposure through the listed stocks. So which you don't have at this point in time in the other broad-based indices like Nifty or other broad-based indices. So through this format, you can add exposure and you can be very precise about it. Like in your overall portfolio, if today real estate is 1%, and you want to add 3%, you can look at how much you need to add through this particular fund so that your overall exposure comes to something like 3%. So to that extent, it will allow you to do that, and it will be fully invested. So you know what you're getting into. So there is complete transparency about what you're doing, and you can potentially know. You can be confident about why you're doing that.
okay. So, all right, we have come to an end to this interesting session. Thank you so much, Arun, for your valuable time and inputs.
Thank you very much.
Yeah. And finally, I thank each one of you for being such a wonderful audience. Have a lovely day at work, guys. Bye.